Okay, so the Oracle of Omaha, Warren Buffett, just invested $4.1 billion into Chevron. Was this a good investment? And of course, is it a good investment for you? That's what we're going to be breaking down today. Anyways, let's get down and let's check out this stock and let's check out this company. Okay, so as we can see right now at the time of making this video, Chevron is currently trading at $95.80 per share. From there, what can we get from this stock? Well, right away, we want to look at the dividend. And the dividend is currently 5.4%. Is that a safe dividend? Well, we're just going to have to check out the stock even more because in the States, a lot of companies, once it gets past 4%, it starts getting iffy. Once it gets to 8%, it starts looking scary. It's a little bit different in Canada with the banks. They're generally always hovering around that 4 or 5% range. So it's a little bit different for us Canadians when we're looking at American stocks. From there, the 52-week range is $51 to $106. So technically speaking, this is near the top of its recent 1-year range, and the volume is quite steady. It's currently at 8.5 million shares at the close of this past Friday, and it averages around 10 million shares per day. Why is that important? Well, that means that it's a liquid stock. You're able to get in and out quite easily because there's millions and millions of shares being traded. And according to the estimates when it comes to the analysts, which I usually don't really put too much stock into, no pun intended, but they're saying that the 1-year target estimated is $103, which would make it roughly an $8 increase over the stock price that it's currently at, which is roughly in the range of 8 or 9% over the year. But you're also making that dividend, which I personally love dividend. So over the 1-year trading range, we of course seen the massive dip when the coronavirus happened, because of course when that happened there was also that massive sell-off. Barrels of oil were negative. That's just never happened before. It recovered quite nicely and then it started trailing off once again. Now the idea here, at least in my site that I can see, is that when it came back down, never reached the lows. There was still lower points where it was before, but it was able to bounce off of the support that it has roughly around there. So from there, that's not a very straight line at all, but at least from there it was able to bounce off of that support, at least the somewhat kind of support that it had there. From there, it has now gone into what looks to be a W, which usually means that there's going to be some upward trending motion afterwards. Now, I would have liked to see maybe one more day at that price, but either way, that is still a W in my mind, and I think that it's got some room to run. Now, when you look at the 5-year chart, we do see that it was trading roughly in the range of between 110 and about 130-ish dollars, probably 125 if you wanted to be a little bit more of a stickler. From there, it has now broken above its resistance that it's recently had, so now it's going to be possibly trying to test the $100 range. So you could make a short-term trade and not collect any dividends, but I would be holding this one for a long term, probably at least a minimum of 1 year if I was to invest in this company. I personally have not invested in Chevron myself, but I do hold an ETF that does hold it. Something else that I do like to look at before I invest in a stock is their historic over the past couple of years, their earnings, and of course their earning calls, and are they making more money each year? And as we can see here, there is a decline. However, there was a decline in oil prices anyways, so we would have been seeing this with any oil stock, or at least 99% of them. Now, in the first quarter of last year, we did have a beat. And then the second quarter, which everyone had a very bad second quarter, especially with oil prices going to the negatives, they missed their earnings. So that is a big negative on this stock. In the third quarter, they did beat earnings again, which is fantastic. And then recently in the fourth quarter of last year, they did have a negative quarter, which is, or at least not a negative quarter, but they didn't exactly meet their expectations. They also had a negative year, I'm going to say mainly because of the oil prices, and that's never a good thing whenever they have a negative year. However, one of the things and one of the thesis that Warren Buffett really trades on is when investors are fearful, that's when you want to invest in a stock. When investors are happy-go-lucky saying, hey, this thing is going to the moon, rocket ship emojis, and diamond hands, that's when you really want to get out. And at this point, I know there would be a lot of people shying away from Chevron because of their negative year. And of course, their 2 out of the last 4 earnings calls, they were less than expected. And because of that, I think that's why Warren Buffett was able to invest, because he sees that there's going to be a rise in oil prices because there's people in government right now who are not a fan of the oil industry, and that's going to raise the prices of oil. Number 2 is the UAE. They are currently, I'm going to say probably over the next couple of years, trying to raise the price of oil as much as possible because there's going to be more and more electric cars coming out over the next 10 to 15 years. And if they can raise the prices of oil today, or at least over the next little while, and when they raise oil prices, of course, they are just basically printing money at that point. At that point, they will have still oil left over for the future, but also they're making more money today because they're going to be making less money in the future because there's not going to be as much dependence on the oil sector when it comes to cars and transportation. Because we're seeing more and more electric vehicles and more potential electric planes that may be coming out in 10 to 15 years, we're really going to be seeing a massive cut down on the price of oil, probably in 10 to 15 years. So I personally think this would be a great 5 to 10 year play if you are looking to invest for that amount of time. And at a 5% plus dividend right now, you're basically looking at a very solid company. I can understand why Warren Buffett invested in it. I hope that this video has given you some ideas. If it has, hit that like button and subscribe. Of course, always double check, do your own homework, talk to your own financial people. Never trust a random person on the internet who is got 300 and something subscribers, but I hope that this video has given you at least some kind of information. I'll see you guys again next time.